Welcome to the Techno Fundamental Report for March 21st. Let's talk about risk management. You know, Buffett was very clear on this subject. He said, rule number one, never lose money. Rule number two, never forget rule number one. So risk management is important. Diversification can really backfire on you. Diversification is for know-nothing investors. In other words, Buffett has been very clear on this subject that when you start investing in 30, 40, 50 different companies, you get deep in the weeds. You can't figure everything out. You need to know, what does the balance sheet look like? What does the cash flow look like? What do the upcoming earnings look like? What are the current earnings looking like? Is the company developing new products, new services? What's their management team like? You need to know a lot about your investments. You just don't want to throw money at like 50 different ideas and not really have a handle on what's going on. Put it this way, say it's not, hypothetically, it's 1975, you find Walmart, which was a mega winner. But in order to have diversification, you also had Kmart, JCPenney, and Sears. So you can see the problem. You're diluting your mega winners. So you want to look for the mega winners. So risk management is all about portfolio strategy and positioning of the portfolio. You want to own between 5 and 10 companies, and you want to know something about each one of them. So like this study that I've referred to many times in the past, the agony and the ecstasy. These are the mega winners. Now, out of a 3,000, think about this study for a second. It goes back to 1980 and it ends in 2014. So the study, and it's of 3,000 stocks, which is the Russell 3000 index. So they looked at 3,000 companies over a 24-year period. Now that period is important because from 1980, now you had the crash of 87 in there, but then from 1980 till 2000, you had a major bull market. Then in 2000, you had a major bear market. And then in 2008, you had another major bear market, which was the financial crisis. So if you think about this study, it goes through pretty much a complete market cycle. So when you see the fact that only 7% of the 3,000 stocks were what we would call mega winners, these are the ones that outperformed. They had high relative strength. Now, when you first find these companies, they look like a beautiful rose. And, you know, it's everything you're looking for. But sometimes it doesn't work out and the bloom comes off the rose. You've got to control that risk so that if you do, you know, invest in 5 to 10 companies and one of them is not working out, you need to take quick action. Now, Walter Demas' book here I refer to, and it says, when everybody thinks alike, everyone is likely to be wrong. So you have to be a little bit of a contrarian in this business, whereas when everybody's piling on, you want to be aware of the fact that that creates a lot of risk, because if, you know, things unwind, you have a problem. Now, the two most important things on a stock chart are price and relative strength. Price tells you when the stock is going up or down. Relative strength tells you whether the stock is going up or down faster or slower than the market itself. So let's take a look at a couple of ideas here where I have developed a relative strength component to the chart. So let's look at how I have the chart set up here. First of all, I have the price. I have the 10-day moving average, and I have this is a weekly graph. We're looking at weekly graphs this week. So we have a 10-week and a 40-week moving average. And then down here, I have relative strength broken down two ways. The first way I have it going here is I'm comparing the relative strength of Tesla, this is Tesla, compared to the S&P 500, and I'm using an 8-week moving average. And then I have the same calculation using a 21-week moving average. This strategy is called the quick and the dead. So what it basically is saying here is that when you start seeing the relative strength breaking down below these moving averages, it's telling you the stock's starting to underperform and there may be a reason, so you should be aware of it. So let's take a look at Boeing, for example. Same kind of concept here. You know, this is weekly. We're breaking down below these moving averages, and you can see that the relative strength is deteriorating. I would not own a stock like this, but I would watch it. That's what this is all about. This is a watch list. So recently I was contacted by a friend, and he listens to this video, and basically I've made the offer out there, which is more than happy to accommodate, is where I'd like to see some other ideas. I would like to see, the watch lists of other people. So I got this text. It says, a while back in weekly discussion, you asked for personal watch list. Mine is Costco and Marathon. So let's use this same concept with Costco. You can see here the stock has been in a really nice uptrend here on a weekly basis. It looks pretty solid to me. You had an earnings report in here that kind of caused this gap down. However, it would be nice to see consolidation and then another breakout. Now you can see here with the quick and the dead, what happens here with the quick and the dead is once you break below that first moving average, that's the quick. Then if it makes a lower low from here, that's what I call quicksand. And then if this particular moving average is broken, I call that the dead. So basically, Costco looks okay. I would continue to watch at this point, but it does look positive. His other favorite stock is Marathon Petroleum. Looks solid to me. Now, here's the problem with the oil stocks. You're dealing with commodities. In other words, you're going to have to somehow speculate on the price of oil. And I have found that to be quite frustrating, actually, because I tend to focus on growth stocks. But this does look good. You've got a nice breakout here on this relative strength as well as the lower relative strength. Price action is good. Marathon Petroleum, all the oil stocks are starting to perk up because the price of oil is moving up. Caterpillar, this is another one that I think is interesting. You can see here, very strong. So in other words, one way you could also look at this is that this is a capital industrial situation, and if we were going into a recession or some type of economic collapse, I don't think you would see Caterpillar hitting new highs. So basically the stock looks good. Both moving averages are positive. Trend is good. Again, you're dealing with a very cyclical industry. However, at this time, it looks pretty positive. Now let's get into some questions about the interest rate situation. We know the Fed did not raise rates yesterday. The power index, I really think it's a magnificent indicator because basically what it's saying is that the fact that we're below zero on the power index is telling me that interest rates are losing their upward momentum. And in fact, you can see here on the trend meter how we're starting to come down into the yellow. And basically, interest rates are just moving sideways. This is a big positive. Hopefully, inflation stays under control because that'll be key to this situation. But as of today, I would not be too worried about interest rates. NASDAQ, new high, looking good above both moving averages, looking very positive on the NASDAQ. On the small caps, however, we've been very frustrated. This is an important index if it breaks out and gets going because that's going to really tell us that things are really building some upside momentum. The small caps have problems in the fact that these are companies that, most of the companies in this index are not high quality. And also, there's a lot of banks in here, these small banks that are having trouble. But anyway, we're looking for a breakout in the small caps. That would be nice if we could get back above this 1340 level, but so far, so good. Now, I wanted to take a look at our three economic indicators because I think they're important right now. Again, interest rates moving sideways. Looks like things are starting to stabilize on that front. You can see here the price of oil getting back above that 200-day moving average, breaking out currently at $82.73 per barrel West Texas. So, the oil stocks are going to react to this. Also, the financials are doing fine, especially the large banks like J.P. Morgan, etc. So, all in all, things are looking fine. The indexes are fine. It's just the question of, can we find the new leadership and the mega winners of the next cycle? And we're sure looking for them. But if you have any questions or you want to send me your watch list, please let me know. Thank you very much.